I want to see just it. There you go. All right. And the stop will stay there. Still very, very modest risk. Okay. And you just simply just let it cook. Now I'd like to see it break below. See this wick here? In all of this little consolidation area, this wick, its consequent encroachment, this level here, right there. I want to see price gravitate aggressively to this and through this. If it can manage to do that and close below it, then that is a very good encouragement. It allows me to feel confident that these relative equal lows will be taken. How far can it go below those relative equal lows? Well, we've referred back to that 5-minute chart, and that's that buy side and balance sell side efficiency down here. So I'm going to go back out to a 5-minute chart so you can see where we're at. Look at the lay of the land. Remember this one over here? This fair value gap. It's a buy side and balance sell side efficiency, and it's below this low, this low, this low. And yes, we've already stabbed down through it, but look at the body. See what it did here? It basically lined up with this low and this low. So whenever I see something like that, and I can, I guess, build a narrative that it's likely to go lower still, then I look at this as a shallow run into liquidity. So therefore, I would expect a deeper run lower. And where would that go? Below this low and into this inefficiency that's a discount array. Okay, so back to a 1-minute chart. Now, if it can touch this 5-minute, I'll add one more in it and leave the stop as it is, banking on the idea that we've already did the work in the upper half of this inversion fair value gap. That dashed line here, that's a line in the sand that you shall not cross. Why? How do I know that? Because we spent a lot of time here and then we dropped lower and outside of it. So all I'm looking for is a return back into this, which was the original premise. If it would have given me it earlier, I'd be short from there. But now, since it's still offering it to me, I'm not looking at this as a long. Let's put it that way. I'm looking for this as a return to a short-term premium, and then it should aggressively drop out of that, and then gravitate to and through this consequent encroachment, that wick, because it's the extreme low that would set the stage for continuation below here. I don't need to trade below the low of the wick. I need to trade through and close below the consequent encroachment of that wick. If it drops here without even going back to the 5-minute bearish order block opening price, which again, let me show you. It's this candlestick right there. Okay, that opening price, that's what you're watching me observe and execute on. So one more tap into this, I'll add, because I feel confident that we're about to break aggressively lower. Nothing wrong with taking a little bit of heat on your trades as long as everything that you're seeing still is in the correct context of what took place before you took the trade and executed on it. Meaning that as long as it doesn't go above here, everything that sees price go up into that price level is completely permissible. Like that. Okay, so now it should really strongly reject that because we didn't get to that 5-minute bearish order blocks opening price. That's at this line is, okay? And we went back up into this entire range that's shaded in orange is this buy side and balance sell side efficiency. And the lower half of this is where the real work of the algorithm is. Elusive, nobody wants to believe exists algorithm. It's supposed to be buying and selling pressure. That's what they tell you. Right? So I'm viewing it like this. I gotta be honest with you. I'm anticipating all the noise that usually comes with me pressing my mouse. It's not there, so it's something I'm getting used to. Some of you are very appreciative of it because you hated that sound all the time. You need a new mouse. Mm, no, you need to accept the fact that some people are going to make their content the way they want to make it. And to be honest with you, I kind of miss it. And because I'm bearish and it's a scalp, it's not like I'm trying to call the top in pound dollar that it should just fall out of bed, for 1,000, pips or whatever. I'm suggesting that it's just going to run down into these lows, into an old inefficiency that's a discount. And then it could set this stage to then go back up into this area here either today or next week. Now we want to see it aggressively drop down here and attack that consequent encroachment, that wick. Obsessive compulsiveness, if you believe it, won't allow me to not get $3,000 out of this lemon. So I'm trying to squeeze a little bit more out of that. All right. So now we want to keep this stop where it is until we get through this threshold because this is the marker that sets the stage for confidence, not overconfidence, not I'm right and nothing can go wrong. It just means that if we trade through this consequent encroachment of that wick on a closing basis, then I can start to work that stop loss down to this high here plus a tick. But it has to do this part first. This was the risk I was willing to put on when I first put the trade on here. And I have to sit with that risk until I see a realized confirmation in order flow. No level 2 data stuff required. No depth of market, no ladders, none of that stuff. No market replay required because when you know what you're doing, you're sticking to ideas and premises that repeat. And since I mentioned that this entire buy side and balance sell side efficiency, the lower half of that, that's what the algorithm is going to refer to. Notice that the bodies stop below that midpoint. Let me take this lower shaded red area, that midpoint off, because it's a little confusing to me as well. So we traded up into it, but look at the bodies. Bang, stop, not interested even going up there. Not even interested in going to the 5-minute opening price of that order block either. And that is not failure. That's actually what you want to see if you're bearish. You want to see the inability for price to even get to premium arrays. Because if it can't do that, what is it saying? It's saying that the market is inherently weak. It's lacking what? Strength. So if it's lacking strength, then you can outline a bias that's framing an obvious price run to a discount array, like the 5-minute buy side and balance sell side efficiency down here below relative equal lows, then it goes without saying that you probably have a likely winner. It doesn't mean it's a perfect, absolute guarantee it's going to work in your favor and you can't lose. It just means that I'm watching this fair value gap, by the way. This means that you have something that you can you can engage in. Isn't it nice? Almost like I know what I'm doing. We're watching that consequent encroachment right there. And we want to see how it delivers sharply and through it. That's what we want. All this wick in here, watch the consequent encroachment of that. We've already seen a reaction to it on the high end of it. I'll explain that in a second. Moving down into it here and then coming back up, opening, going into the fair value gap, and then repricing lower. We want to see it now respect it on the upside as a resistance, basically, and then send it sharply lower. This also is an inversion fair value gap. We have a confluence of things here. They're boding well for lower prices. And we're in the last minute of the macro of 350 to 410. Same premise here. We've already worked in the upper half of that inversion fair value gap. So we want to see everything stay in the lower hemisphere. Tap below that and then send it lower. That'd be wonderful. Again, no market replay required. When you haven't done enough work with testing and then forward testing by just reading the tape, no executions, those little supposed dojis and whatnot or hammers that can trick you. I promise you, Steve Nielsen doesn't have any understanding of the algorithm that controls price. So you can be fooled by things like that and think, oh, well, this is rejection. It's bullish. It's not. Case in point, I have to be careful because these facetious statements that I routinely include, that's just me being me. And I'm reminding myself that I used to believe this nonsense when candlesticks supposedly had some kind of sway over price. Okay, so we traded right down into that consequent encouragement of that wick. We want to see it go through it now. And you'll see that once we trade through it and close below it, the market should stay heavy, meaning that it should still gravitate towards these lows right in here. Okay. And this is labeled as a minor sell side liquidity pool. I know. Some of you are like, can you just make a template? It's so much easier. Can you just let me do it the way I want to do it? I hear you. All right. So we had our close below consequent encroachment. So now we should see heavy price. Doesn't mean it's going to be a straight shot. Ideally, that's always the best case scenario, but we don't require that. But because we've done this now, I can lower the stop loss and reduce the risk. Okay. So now I have trimmed some of the risk. And because we're below that wick, if you were inclined to, say you're brand new and you really need to have that little encouragement, this would be a wonderful time for you to take a partial off. Okay. And that would simply be done by changing whatever amount of position you have open. Right now, I have 2.2 in leverage short. So I wouldn't take 750,000 off personally, but you could take something like 100,000 in terms of leverage off, and that would satisfy that impulsiveness to want to just have something in your win column. And I'll just add the execution since it's not going to be a problem viewing anything now. Enjoying the feedback from the members of the free Telegram channel. You're all seeing what the paid mentorship students have been seeing for a long, long time. I'm not that guy that you think I am.